All right, let's dive into one of the wildest, most talked about bets in the entire financial world. We are talking about Michael Saylor, his company MicroStrategy, and a strategy so bold it could either rewrite the rules of corporate finance or become the most spectacular flameout we've seen in years. Let's break down the Saylor playbook. And this, right here, is the man at the center of the storm. This quote tells you everything you need to know about his mindset. You see, while most of Wall Street is terrified of volatility, Michael Saylor, he runs straight into the fire. He's not just putting up with risk, he's actively using it. He's weaponizing the crazy swings of the market to fuel his entire machine. So here's the big idea, the central claim we're going to pull apart today. Saylor says that owning his company's stock, MSTR, isn't just like owning Bitcoin. He says it's better. A supercharged, high-octane way to get exposure to crypto, all wrapped up in a neat little package you can buy on the stock market. Now, this is a claim that has Wall Street both completely mesmerized and absolutely horrified. Let's find out why. Okay, to understand his argument, you first have to understand the incredible machine he's built. Some people have called it a literal Bitcoin printing machine. Now, it sounds like pure magic, I know, but it's actually just some really, really clever financial engineering, using a tool that most people have never even heard of. And this is the secret sauce, the convertible bond. Now, just hang with me for a second. This is way more interesting than it sounds. Think of it like a hybrid vehicle. It's part loan, but it's also part lottery ticket. An investor lends a company money, but if that company's stock suddenly goes to the moon, the bondholder can trade in their loan for company shares and cash in big time. This little bit of flexibility, well, it's the key that unlocks Saylor's entire plan. So here it is, the playbook laid out in 4 simple steps. It's kind of brilliant. Step 1, he issues these special bonds, often getting billions in cash for practically free with 0 interest loans. Step 2, he sets the price where those bonds can convert to stock way, way higher than the current price. A huge bet on his own success. Step 3, he takes every single penny of that cash and just plows it into buying more and more Bitcoin. And then step 4, the magic trick. By doing all this, he actually increases the amount of Bitcoin backing every single share of his company. And this chart shows you exactly how it works. I mean, just look at these numbers. Before this move, every dollar of MicroStrategy stock was backed by about 30 cents of Bitcoin. But after he issues the bonds and buys more Bitcoin, that ratio more than doubles to 77 cents. So even if your slice of the company pie got a little smaller, the whole pie got so much bigger that your slice is now worth way more. It's like financial alchemy, and it's the absolute core of the Saylor playbook. Now, this all sounds fantastic for Saylor and MicroStrategy, right? But it brings up a really important question. You know, every trade has 2 sides. If Saylor is getting this sweet of a deal, who in the world is on the other side of the table funding this massive gamble? Exactly. I mean, think about it. Why would anyone on Earth lend a company billions of dollars and agree to get 0 interest back? It just doesn't make any sense for a normal investor. If you want safety, you want an interest payment. And if you want to gamble on growth, well, you'd just buy the stock itself, wouldn't you? And this right here is the answer. It is definitely not your grandma's retirement fund buying these things. The buyers are super sophisticated hedge funds. See, they don't care about a tiny little interest payment. They're hunting for much, much bigger game. They are buying one thing and one thing only: pure, uncut volatility. Those wild, unpredictable price swings in MicroStrategy stock, that's not a bug for them. It's the entire feature. Yeah, the hedge funds absolutely love this deal because they can play some really complex games. They'll buy the bond, and at the same time, they'll short the stock, basically betting the price will go down. So if the stock skyrockets, their bond turns into super valuable shares, and they make a killing. But if the stock tanks, they make a ton of money on their short position. By constantly tweaking these positions, they can literally skim profits off the chaos itself. Okay, so we've seen the genius side of the coin. Now let's flip it over and talk about the gamble. Because this whole strategy, it's not a simple game of chess. It is much more like juggling chainsaws on a high wire during a hurricane. Absolutely everything hinges on one single critical factor. This number. Burn it into your brain. $76,037. This is the average price MicroStrategy paid for every single Bitcoin it owns. It's their break-even point. This isn't just a number. It is the line in the sand for this entire enterprise. As long as Bitcoin stays above this price, Michael Saylor looks like a visionary. But if it falls below? Well, if it falls below, the company could enter what some people are calling margin call hell. See, if Bitcoin's price collapses, the value of their main asset, the collateral for all their debt, evaporates. The banks that lent them money could panic and issue a margin call, demanding more cash immediately. And that could force MicroStrategy to sell its Bitcoin at the absolute worst time, pushing the price down even more and creating a truly terrifying downward spiral. And this chart shows you the brutal reality of leverage. It's not a game. Over the last year, while Bitcoin took a pretty painful 23% nosedive, MicroStrategy's stock got absolutely crushed, falling 55%. That leverage that juices the returns on the way up, it's a monster that turbocharges the losses on the way down. It is a white-knuckle ride that can wipe you out so much faster than just holding the asset itself. And we also can't forget what MicroStrategy actually is. I mean, underneath those billions of dollars in Bitcoin, there's an old software business, and its revenues have been going down for years. Critics basically argued this isn't a tech company anymore, it's a speculative crypto hedge fund wearing a corporate trench coat. And its stock trades at a huge premium to its Bitcoin holdings, a premium built entirely on faith. If that faith disappears, the stock could get vaporized. So let's put it all together. Now that we have things like spot Bitcoin ETFs, investors have more choices than ever before. So how does a stock like MSTR stack up against the other ways to play this game? Where does it fit in your playbook? This table really lays it all out pretty clearly. Look, if you just want simple, direct exposure to Bitcoin, you buy an ETF or you buy the coin itself. It's a one-to-one bet, plain and simple. But if you are chasing those massive, amplified returns, and you have the stomach for extreme risk, MicroStrategy offers that 2 to 4 times leverage. It also gives you access to way deeper pools of institutional money. Really, the choice just comes down to this. What's your appetite for risk, and how badly do you want that amplified reward? And for all the talk of risk, you simply cannot argue with the results so far. I mean, look at this. Since he started this strategy back in 2020, MicroStrategy stock has returned over 3 times more than Bitcoin itself. 1,000% gain is amazing, but a 3,200% gain, that is just absolutely mind-bending. And that is why so many investors are drawn to this flame, even with the very, very real risk of getting seriously burned. So in the end, it comes down to this. Michael Saylor has either written a revolutionary new chapter for how companies manage their money, showing them how to use debt and volatility to create insane shareholder value, or he's taken a company, strapped it to a financial rocket, and just lit the fuse. The only question left is whether that rocket actually makes it to the moon or if it blows up right on the launch pad. So, what do you think?